Hello, I'm Scott Caithness. I'm the Managing Director of ASX-listed company Alderan Resources. We're an exploration company with projects in Utah in the USA and also lithium in Brazil. Our USA projects are copper gold.
Fantastic, Scott. Lovely to have you on the show. Not been on before, and we always get the request for news stories. So here we go. What do I start with you? What's your background? What's your story? What have you done that's relevant to what you're doing now?
Look, I started my career with CRA Exploration, which is now Rio Tinto Exploration. I spent the first nearly 20 years of my career with them, working both in Australia and internationally. And prior to joining Alderan, I spent some time with Alderan Resources living in India. I was their Director of Exploration prior to that. So I have had some experience also in the junior space, looking for projects in Madagascar, iron ore in Madagascar, and also copper and gold in the Philippines.
Right. Okay. So big company experience with a little bit of junior experience in there. What's the plan here? What are you trying to do? Because you've been after gold previously. You've now got lithium, which perhaps has had a bit of a tumultuous ride of the past couple of years, but you were at copper, which I think is definitely on the up at the moment. So for you as a business, what's the plan?
Yeah, look, I think obviously as an exploration company, our prime objective is to make a discovery that's economic. So that's the prime focus. The company has been involved in copper for a number of years. We've had copper and gold projects in the US. Obviously, over recent years, we've been focused on our gold properties, but that's primarily because our copper property was farmed out to Rio Tinto, and they were exploring that for very large-scale porphyry projects. Unfortunately, they weren't successful with their exploration for porphyries, but it's provided us with the opportunity of getting that project back, and we believe that particular project, which is Frisco, has potential for medium-scale, high-grade copper. So not really a Rio Tinto target, but something that's much more aligned to a company of Alderan's scale. So that's what we're doing on the copper side. With lithium, we obviously picked up a few lithium projects in Brazil towards the end of last year. Those projects are at a relatively early stage of exploration, so we're just carrying out first pass stream sediment work on those at the moment, and then we'll see what comes of the results from that exploration work as we go forward.
Right, and so and just with the gold, you're talking about gold and oxide heap leach type thing, which very popular in North America, even South America.
Yep.
It wasn't getting the traction that you wanted. Does it have some value on the balance sheet? What do you do with it?
Oh, look, I think it's a valuable property, and there's opportunity within it. So we did quite a bit of work on it, I guess 18 months ago now. So we were focused on obviously the oxide gold, but we do believe there's also some potential for primary gold in there as well. So historically, we picked up the Drum mine. That had historical drillage sections in it that went up to 38 grams per tonne over assay intervals. It also was previously mined as an oxide deposit. So the mineralization is continuing down dip, and it also has that potential for some primary. About 2 kilometres to the north of that, we had the Mispar deposit, which again was drilled and explored in the 1980s. So Drum was mined in the 1980s. So Mispar the same, but never mined. We did a lot of drilling on that to try and prove up the oxide deposit that was there. So we confirmed the historical work. We believe that it's part of a very large mineralized system. But I guess the prime problem that we had is that oxide heap leach gold, we're an ASX listed company. There's not a lot of oxide gold mines in Australia and gold mining in Australia. So we had a lot of trouble getting traction in the market here in Australia. So we've had to sort of change our strategy a little bit and go back to the focus on copper and the lithium focus, so critical minerals going forward.
Yeah, and I've got no problem with that. Exploration, which is sort of the lifeblood of this sector, you've got to get out there, as you say, try and make economic discoveries. But what I'm trying to wonder is there some value to it? Because I think in the name of the game for the last 3 years for most juniors globally on whatever exchange is survival, right? You've got to be at the table to play the game. But you got to think of, and money has not been easy to come by. It's expensive when you do find it. So therefore, do these things have any residual value? Could you flip that out? Because it sounds like a sort of, as these heap leach projects tend to be, they can at some point be a sort of small but profitable business for someone. Do you think that is there any way of monetizing this at some point now or in the future?
Oh, look, I think there is definitely that opportunity as we go forward. I mean, it certainly is the sort of project, and there's still exploration upside that companies may well be interested in having a look at as we go forward. So that is certainly an option for the company as we go forward. Definitely.
Right. Okay. Now the bit, like I said, and I just want to sort of address some stuff and then sort of park it. So we're going to park the gold there. The potentially some future value there. In terms of helping the company, in terms of non-dilutive activity, etc. The lithium too is, like I said, it's been on a meteoric rise and fall, and it is kind of in some way it's a small nascent industry where it'll find its level at some point. So in terms of allocation of time, money, etc. on the lithium, have you effectively parked that up as well yourselves to focus on the copper, or where you at?
Look, we are still doing work on the lithium because obviously we're at the earliest stages. So I guess my view of lithium is exactly as you say. It's been on a huge run. Obviously, it's declined over the last 6-12 months. The price is probably getting to a point where it's going to stabilize. Maybe it's hit the bottom. It's come off the bottom a little bit. I just see it as being a commodity that will normalize like every other commodity that we have. So it'll just boil down to supply and demand at the end of the day. It's clearly a commodity that's got good growth going forward, but exactly as you say, it's coming off a fairly low base. So a few significant projects coming on stream around the world can satisfy the demand quite quickly. So I guess with my background coming out of Rio Tinto, I mean, I look at it and say, well, all that does is sharpen your focus. You've got to find something that's competitive against your peers going forward. It's not just a case of I've got lithium in the portfolio, therefore I'm okay. I have to find a project that's competitive. We certainly believe that Brazil will be a competitive jurisdiction. There is a project there that has come on stream, Sigma Lithium has come on stream in the last, 6-12 months. That's been very successful as a project. It'll be a major producer. There are a number of other companies that have got significant projects there that are either entering feasibility stage or are well advanced in terms of resource delineation. And Brazil is encouraging the companies, and the state we're in, Minas Gerais, is encouraging companies to come. So I think Brazil will actually be very competitive because it's got good infrastructure. It's not a difficult country to operate in. Certainly my experience of visiting our project areas has been very positive. It's easy to get around. It's not a difficult mining environment. So I think that Brazil will actually be very competitive against some of the projects that are in far more isolated locations in some of the well-known mining countries in the world, like Australia and Canada. I think Brazil's potentially got a very big competitive advantage. Okay,
so potentially one for the future in the sense that, lithium price has got to find its level or its range to kind of attract market interest. But again, coming back to your background, CRA, Rio, what the big companies want, and we're about to talk about it in the context of copper in a second. The lithium project, does it have, again, some value today for you? Should you decide, well, we think this is attractive, we think potentially it has the scale, potentially it's the type of mineralization which suggests that the economics would be good if we can prove up scale. Would you make that someone else's problem and get focused on one thing? Because with small companies, the ongoing challenge is managing balance sheet, managing cash flow, and being focused. So how are you viewing where you take the lithium project to before having to sort of have a think about, how that fits in with the company strategy?
Look, I think exploration is a fairly ruthless business. You have to find something that has a chance. the instant that you don't believe that it's got the opportunity to go forward, then you shouldn't be spending any further money on it. You've got to be fairly clear cut. I mean, there's lots of examples of geologists and companies that, they fall in love with their projects and they continue to explore them way beyond the point where they should have perhaps abandoned them, pass them on to someone else. So I guess my view of the lithium projects in our portfolio at the moment is that we're doing first pass work on them at the moment, which is basically stream sediment sampling to try and identify anomalies and targets that are worth following up. I mean, any of the projects, we've got 7 projects, we've got nearly 500 square kilometres in coverage. If those results don't come back from that work with positive results where we can clearly see that we've got the potential to chase up and define a target that is worthwhile pursuing, then we will relinquish those areas. We won't continue. I must admit, the one thing that has come to the fore on my trips to Brazil is there are still plenty of opportunities to pick up good quality lithium projects and opportunities in Brazil. So again, I think exploration is this constant process of trying to upgrade your portfolio. And that's one of the hard parts about exploration, because somebody's always presenting you with a new opportunity and you have to make a decision between what you've got in the portfolio now and what is being presented to you. And that can often mean that, if somebody presents something that's better quality than what you've got in your portfolio now, you shouldn't ignore it. You should be looking at a way of getting that in, and then maybe, exactly as you're alluding to, what you've got, which may not be quite as good, then maybe you look at trying to offload that, trying to commercialize it, doing something with that. And effectively, that's the path that we'll probably be going down with our gold projects in the US. So exactly the same. So yeah, I would see the lithium as falling in that category. If we get the opportunity to pick up, let's say, more advanced projects that are better than what we've got in the portfolio now, then obviously we'll look at those as well going forward.
Right. Okay. It's very commercial approach to this, and it's a fairly ruthless space, and you've got to make sure you're not drinking the Kool-Aid,
exactly,
for sure, and make that as it's quick to kill, quite frankly.
Yep.
Okay, I like that. I like that attitude. Let's go to copper, because I think people are super excited about copper, and you're in the right jurisdiction with the Frisco copper asset. So just tell us what you now have, because obviously there's been a fair bit of work done. You've had a major say, well, look, we haven't found what we need at the scale that we need, but it's still valuable for someone who's maybe got not such grand expectations of this thing. It could be a company maker. So what are you going to do with that asset? What do you now know about that asset?
Yeah, I joined Alderan in 2021. So I've been with the company now for just under 3 or just over 3 years. So I've always liked the Frisco project. It was farmed out to Rio Tinto when I joined the company. Rio Tinto was exploring it for obviously very large scale porphyry coppers. They saw the potential for that, which is a bit of endorsement for the area to start with. So just to give you a bit of a background on the area, Frisco is an old copper gold mining and also silver lead zinc mining district. So it was mined from the late 1800s through to the early 1920s. One of the issues in exploring in the US is tenement and tenement ownership. Obviously, there's tenement that can pass from generations to generations within families. A lot of the licenses are quite small. So one of the issues that Frisco had, and particularly the Cactus area, which is what we're focused on at the moment, the Cactus copper gold mining district, was there's Cactus that's sitting there as an old copper gold mine. Then literally only a couple of 100 meters away, there's Comet, and Cactus had one owner. Comet had another owner. Then we've got another prospect, New Year's, which is again about 400 or 500 meters away. Again, a separate owner. So everything was divided up. There were license disputes between the owners. People weren't able to develop a project as a whole. So basically, the area was mined up until I think about the mid-1920s, and then intermittently it was mined for up until about 1957. So it had a bit of a checkered history after its initial glory days. Copper grades out of Cactus estimated at 2%, plus 2%, with a gold credit of about 0.3, 0.4, and also a silver credit. So quite good grades. What's happened is subsequent to the mining that was going on, when the mining ceased, basically a few companies came in and did some exploration on the area prior to Alderan. So most of that exploration work finished in the early 1960s, and I think some carried through to the 70s. But there were quite a number of holes drilled into it with exploration, and look, some of those holes, there's intersections of 5 meters at nearly 7% copper, sitting within 40 meters at about 1.5, 1.6. There's multiple intersections of sort of 10 meters at 2% copper, sitting again within broader intersections. Rio Tinto actually drilled a hole into it. They didn't drill an overly deep hole, so they weren't actually, I don't think, targeting a porphyry within it. They got an intersection of 42 meters at 1.9% copper and 0.6 grams per ton gold, sitting within 70 meters at 1.1 copper and 0.3 gold. So there's some really significant old intersections, and that's what always sparked my interest in the area. So I must admit, I was quite excited when we got it back off Rio. They generously sort of just gave it back to us. They walked away because it didn't meet their criteria. So we've been doing a little bit of work on the project over the last few months to model up the old resource and also to do some three-dimensional modeling of the magnetics that Rio did. So Rio Tinto flew a very high-quality drone magnetic survey over the entire Frisco area, which included this Cactus Comet deposits that I've been referring to. And so we've modeled that up in 3 dimensions with the geophysics, and we've come up with quite a few targets out of that work. So, yeah, we're very excited about it.
Yeah, I was looking at the grades. It's in your deck, and people should perhaps go and look at the presentation. The grades are extraordinary, and the kind of the gold and silver credits are not to be sniffed at. Indeed. See, what work have you done on it? When did you get this back? So I should ask.
We got it back second half last year.
Right.
So we've had it for a few months. And basically the work that we've done is we've done three-dimensional, using the Leapfrog program, three-dimensional modeling of the Cactus and Comet deposits, because Cactus and Comet sit within a fault structure. They align along this structure. They're basically breccia style mineralization. And the mineralization looks spectacular. So I visited the site, I've seen the waste dumps, and it's basically, it's a chalcopyrite, copper-rich matrix within the intrusive rock. So it actually looks, the mineralization is very pretty and it's quite spectacular. You see a lot of copper mineralization. And everybody has gone and focused their work on that. And I think I liken it to like the shiny toy, right? We all go and we see the shiny toy and we all want to go and play with the shiny toy, but we don't necessarily look at the other toys for a while. And so all the historical explorers have pretty much drilled there. Alderan did a few drill holes into there. Rio Tinto even drilled a few drill holes into there, even though it wasn't really a Rio Tinto scale target to look for. So what they've ignored, and what all the explorers have ignored, is the bigger picture of the district and the Cactus area. So Comet is sitting there as quite a small, high-grade gold pipe. So it's basically a 1 gram plus gold with a copper credit. Cactus is sitting literally a couple of 100 meters away. That's a high-grade copper, and it's got a lower grade gold credit. But then the interesting thing that's come out of our modelling is the modelling extended further to the northwest along the same structure that Cactus and Comet sit in, And actually, we included the drill holes, the historical drill holes that have been done on the New Year's prospect. Now, New Year's is about 400 or 500 meters away from Cactus. And what we found out of that modelling was that there are some drill intersections there that have got greater than 10 meters at greater than 1.5% copper sitting in it. So we could only find records for 12 historical drill holes into the prospect. 2 of those drill holes that were drilled directly into the prospect had intersections of, as I say, anywhere between 10 and 14 meters at grades of anywhere between 1.5 and 2.3% copper. Again, sitting within wider intercepts of anything up to about 30 meters and about 0.8. But then, interestingly, we had another hole which was drilled by Newmont actually in 2002, and I think it was they only drilled 2 holes in the prospect, so it was a very brief exploration program for Newmont. We originally had that hole positioned at New Year's because it's a NY prefix, NYM prefix in the drill hole. We went back through the old records again recently, and I found 2 references to an alternate coordinate. And what we found is that the drill hole actually is positioned midway between Cactus and New Year's, so it's not where we'd had it put in originally. That drill hole got 42 meters at 0.85. Apparently, according to the log, all oxide, which included 2 zones of mineralization, one of 11 meters of about 1.6 and another one of about 5 meters at 1.3. And that's in a zone that it's got no drill holes around it. So there is potential that the mineralization extends from Comet through Cactus all the way to New Year's. The interesting part about what we did too is we did modeling of the 3D modeling of the Rio Tinto geophysics. And what we found out of that is, and what we'd always known, we think we'd known from earlier geophysics, is that Cactus and Comet sit in a magnetic low anomaly, which goes with the alteration of the rocks and what you would expect for an intrusive breccia coming up. But then there's these other magnetic lows, and the magnetic lows appear to follow structures. And so the magnetic low that extends at Cactus and Comet goes up to New Year's. You can see the magnetic low. And then there's also an east-west trending structure as well, which has got a much larger magnetic lows. And when you start looking at the magnetics, there's quite a few of these structures and lows. With the 3D inversion modeling that we did, basically, Comet stands out as a very small bullseye magnetic low anomaly. Then you go to Cactus, and it's about twice the size of the Comet anomaly, bullseye, very discrete. Then you go to New Year's, and it's twice the size of the Comet anomaly, and is a complex anomaly that's got almost like three nodes to it, three particular lows. They coincide with where the drilling is. The drilling at New Year's is right on the eastern side of that anomaly. The rest of it hasn't been tested. The other 2 magnetic prongs haven't been tested at all with drilling, and they all seem to coincide with structure. And from that magnetic, so we're using basically the Comet and Cactus to model and look at these other targets. We basically identified another 12 targets in the same district that look identical to the Cactus and Comet anomalies. So we see that as being a great exploration opportunity for multiple. None of these targets have been drilled. There's no surface work done on them. We found a record of old soil sampling, again from the early 1960s. The soil sampling stops to the south of New Year's, and it stops to the west of Cactus and Comet. So we're going to extend the soil grid, and we're going to drill New Year's. Right.
Okay. So to the uninitiated, it sounds like you've got historic grades which suggest, good copper grades, and yep. I say, with a bit chunk of gold and a bit of silver in there as well. So it's very attractive to the eye. I then sort of come back and sort of look at where you're at in terms of market cap, in terms of cash, etc. And my question to you is, right, what's the best way forward? What's the picture you need to paint? How much money is that going to cost you to do? Because if you could go and blow your brains out and, that would be it. Or do you, with in terms of soil sampling, in terms of the 3D work that you're doing, in terms of the modeling that you're doing, because, can you get people excited about what this not quite a district, but this area could be if you go about it the right way? Because raising equity at these, where you are today will be difficult for you in terms of dilution. But you're excited about the potential. I'm looking at this going, actually, I wish I'd been aware of this a little bit sooner, because it looks quite attractive in terms of a high leverage, high risk, but quite potential return. But you've got to edge your way down there without going crazy with the dilution. So how do you do it? How are you going to come up with that?
Yeah, look, I think obviously we can carry out a certain amount of work at the moment. So our plan at the moment is we can easily do the soil sampling. That's no problem. We can easily drill probably 2 or 3 holes. So we've basically put together a staged exploration program, particularly a staged drilling program. So what we intend to do is the historical holes. I mean, some of those drilled in 1964. We've got to go back and we've got to verify those holes. We've got to prove those intersections were real. So that's the first stage of the program. The soils will help us in terms of trying to identify where to go next, but we've got a few ideas. So one is a further hole into the structure that goes from Comet, Cactus, New Year's, so that we can test that area in between. The discovery of the Newmont hole was a bit of a revelation for us, because if that's 42 meters of oxide mineralization from surface, it does raise the possibility that one of the other historical holes at New Year's was actually from, again, the mineralization is from surface. So again, we've got another potentially 30 to 40 meters of sufficient oxide, possibly oxide mineralization at that location, which raises the possibility that there is potential for a significant oxide deposit sitting there above primary mineralization. If that's the case, then you've got opportunity for SXEW, which would be fantastic. So what we're going to do, the first phase of the drilling...
Explain that. Don't lose everyone. What's that mean?
Oh, sorry, SXEW. It's near surface. It's just leaching. It's just heap leaching, a copper deposit, and it's a very, very cheap way to produce copper. Extremely cheap. Look, I don't know what the costs are at the moment, but I know it's extremely cheap. I visited some of the early stage SXEW deposits back when I was with CRA, like 30 years ago, and there were guys actually leaching copper from deposits literally onto tin cans at that stage in various operations. So it can be, not that we're going that way, but it can be done extremely cheaply, to give a perspective. So we're looking at one in Chile at the moment, and that's depending on the scale, you're looking at $50 to $100 million all in. Throwing, which is really very simple. Very simple.
Very. But that's the thing. That the point is not just the money, but the simplicity of it, and
Correct.
The recoveries are good. So I know where you're heading. And then but just coming back to that kind of say, you got to paint this picture. And I think if there's oxides from surface, there's some quick wins which could be attractive to someone. And it doesn't necessarily need to be an equity play for that, clearly. And then that gives you the kind of the growing room, et cetera, to go after some of this higher grade stuff, which may be, a little bit deeper, because you kind of got this mixed bag of, stuff, pretty at surface or near surface, and other stuff which is, higher grades, from 200 meters down. So there's a bunch of stuff to get after, and it's really a case of how does it all hang together, and either as an ore body, or what's the story in terms of the development of the area. So that's what I'd be intrigued with as you discover more. But for right now, you've got enough for a couple of holes, more surface work and a couple of holes. potentially twinning and just verifying some of this data.
Yep.
You're going to have to get after the good stuff, though. You're really going to have to. It's not a case of geologists process. This is going to have to be marketing, to say, look, we've got something here. So give us those headlines. So, what's the kind of first target that you go for that's going to give you that bang for your buck in terms of the market?
In terms of the drilling, or are you talking in terms of the market?
Yeah, in terms of the drilling. Just in terms of the drilling.
The drilling.
We're just trying to move you from where you are now.
Yeah,
because like I say, I think there's a sort of legacy issue of which I think most explorers go through, which is, trying to find a discovery, trying to show that it has some economics to it, over a period of time. But if you can't do that quickly and keep the excitement in the market, you lose people and they're on to the next story. So drill wise, what's going to give you that headline?
Oh, look, I think some of those intersections where we can start to get the 10, 15 meter intercepts at 1.5%. I mean, there's one of the things with the old drill holes is there's no gold assaying, virtually no gold assaying. So we don't really know what the gold credit is in that particular area as well. So our target overall is we're trying to chase tens of millions of tons. It might be in 2 or 3 deposits, but we're chasing tens of millions of tons at 1.5% copper equivalent is sort of the ballpark that we're sort of looking at and trying to pitch at. If you look at the geophysics, and if those geophysical targets come good, then I think that's well within the realms of possibility, and we might be pleasantly surprised. I mean, as I say, all of the main geophysical anomaly at New Year's, the one that's actually over where the drilling was done, is basically it's about 500 meters long by about 450 meters wide. That's one of the 3 prongs. So there's another 2 prongs that are similar size, right as part of that complex magnetic feature. If New Year's starts to stack up, and obviously there are some drill holes in it that where we know you've got good grade, and the anomaly is very similar to what we've got at Cactus and Comet, then you've got potential for significant tonnage and that sort of grade. Yeah,
and I think 2 things just to remind people again, sort of looking into, because we have a lot of people sort of new to natural resources, new to mining, new to copper. So you think average grade around the world seems to be sitting somewhere around 0.4%. Okay, so just to put this project in context, there is that, and gold credit. If you sit even at 0.2% gold, you're still talking about 20% of what are 2,300. So sort of 400, 450 type level contribution going on there as well. So it's all these things are quite important in terms of the economics, which is something that you've got to go through. So, Scott, for me, I'm really interested in what you've got at the copper, and more importantly, how you advance that. And then, you've got to kind of, I guess, come back to market and say, look, we've got some good stuff in here. We've got a couple of drill holes, and here's how we go about financing to be able to advance this story. That's what I think I'd be looking from you next. Once you've kind of got a little bit more data for us. What's your view? What's the opportunity ahead of you? What would you say to your potential investors?
Oh, look, I think obviously that as we've spoken about, our copper opportunity we see in the US is significant. So we're going to be focused on that. We've actually got the drilling program planned. We're planning to execute that in June. Soil sampling will start next month. So we'll know pretty quickly where we stand. We'll know in the next, let's say in the next quarter, the next 3 months, 3 to 4 months, as to where we stand there. And then obviously with the Brazil work, we'll have assays coming in on the Brazil lithium over the next 2 months. We should be starting to get assays any day now for the program, because that program's gone on for a few months. So we've been progressively putting in samples. But that's earlier stage. So even when we get those assays, it'll be things to follow up to try and identify projects and targets. So really, I guess our focus over the next few months is certainly in the US. And as we discussed earlier, we're always on the lookout for new opportunities as well. So things can't things come about, and if some of those good opportunities come through and we're able to access them, we'll do that as well to add to the portfolio, further enhance it.